Well, the good news is that the first half of the year is over. The bad news is that we still don't have a lot of visibility in terms of the things that got us down 20% for the first half of the year. It's inflation, it's the Fed, it's, I don't know, is it recession, is it a slowdown, is it stagflation? But all of these things are still top of mind, and I don't think they're going away anytime soon. And Melissa, I really was disappointed in the economic data both yesterday and today. The core PCE numbered the deflator at 4.7%, even though it was down from the prior reading. It's still a ways to go from the Fed's goal of 2%. And of course, you got the ISM number, and even though it was expansionary, the new order number fell into contraction. And new orders, we know, are leading indicators for earnings and capex. This is not stuff we don't really are surprised about. But it is certainly something to watch. So now the Fed has to tighten into a slowing economy, and then we have to get through the non-farm payroll numbers next week, and then we have to get through earnings, which is going to be, I think, a very wild ride. I don't think you're going to see really big disappointments in demand, maybe certain sectors like we saw in semiconductors, but I do think we're going to have to get through this cost inflation and supply chain issues.
All right, let's get to Micron shares. They are slumping today in the back of their forecast. The company issuing weak Q4 guidance with the CEO Sanjay Mehrotra saying smartphone and PC sales will decline meaningfully this year. Joining us now for more is BofA Securities senior semiconductor analyst Vivek Arya. He downgraded the stock to a neutral from an overweight while trimming the price target to $62. Vivek, great to have you with us.
Thank you, Melissa. How are you?
Good. Do you think this reset is big enough for Micron? I mean, what's interesting, what I thought was interesting about this was that we just heard from the company at an investor conference at the beginning of the month, and then here at the end of the month, we're seeing the guidance being cut, citing deteriorating conditions effectively.
Yeah, Melissa, so the message here is that the semiconductor industry is finally feeling the heat of the cycle, that the downturn started on the consumer side in PCs, partly because of the tougher compares from when everyone bought a lot of PCs during the lockdowns. So PC market was going to inevitably slow down, but it's slowing down much faster. And then the smartphone market started to slow down, partly because of the turmoil we have in Europe, partly because of the pressure that the consumer is under, and then the lockdowns in China. And some of that consumer weakness is starting to now spill over into parts of the enterprise, data center, and eventually some of the auto and industrial markets. So as we are starting to see the rollover in these different end markets, you're seeing different companies start to express that caution, as Micron has done. So this is a painful but a necessary adjustment process. And I would say the silver lining is that we are now starting to get to a point where consensus expectations for next year will start to maybe over-reflect that downturn. And that is usually the point at which these stocks start to bottom. So we are cautious on demand, but I would say we are actually incrementally a little more positive on some of the semiconductor stocks as this process works its way through the system.
I mean, Steph, the read-through is not good for an Intel. The read-through is not good from AMD, and certainly not good for chip equipment stocks. Where do you stand on the sector?
Yeah, nor is it good for Lam Research or Applied Materials, and they're getting hit the hardest, right? So, yeah, it's the whole food chain within semis. I don't own any semis. I sold all of my semi names about 2 months ago because I was afraid of the potential to see double and triple ordering, and I think that that's what you're seeing. And today, not only is it Micron, but it's TSMC that's saying that orders are slowing, and that has big implications as well. So, for now, I think we just stay away, get through earnings. I do agree that maybe we're getting closer to the bottom because these things are already down 30, 40, 50%. But I would pick my spots carefully. Broadcom is a name I have my eye on, but I've owned Lam Research in the past as well as NXPI, and those are names that are starting to get, at least on the valuation side, more interesting. We just got to get through the E part of the earnings and the valuation story.
Vivek, how can we think about the double ordering issue that so many investors are concerned about? And that, you know, maybe when that's all through, on the other side of it, demand is even weaker than what we're seeing right now.
Sure. So I think there are pockets of semiconductors where there could be double ordering risks. You know, these tend to be exposed more on the commodity side. So, for example, memory, there are greater double ordering risks because you can exchange between, you know, products from different suppliers. But there are other parts of the semiconductor market, such as in cloud, such as in parts of enterprise, you know, such as in semi-cap equipment, where it is harder to double order. But still, the demand outlook from a number of those customers was based upon the assumption of a certain macroeconomic outlook. right? The semiconductor industry doesn't operate in vacuum. It is exposed to a certain broader macroeconomic environment, and that environment is being influenced by the decisions of the Fed, by what's happening in Europe and what's happening in China.